transportation to housing, there are concerns that rents across Lagos and other commercial cities in Nigeria will rise further in the second half, H2 of 2021. Contrary to the initial expectations of some analysts that rents would remain unchanged in 2021 due to the present economic hardship exacerbated by the COVID-19 pandemic, there are reasons to believe that the opposite may actually be the case in the second half of the year, particularly in the major commercial cities across the country. Joining us to discuss further is Tajudeen Ibrahim, who is the head of research at Chapel Hill Denham. Tajudeen, you're very welcome. Thank you so much for joining us.
It's my pleasure.
Start with the housing. What do you make of this report that we could see rents increasing in H2?
I think the report should be read in the context of the rising demand over supply. Based on the data from the National Bureau of Statistics, the housing deficit in the country is around 17 million. And that indicates that if we take a 25-year look at trying to fill that gap, it looks like having to supply 700,000 houses per annum. And that is far ahead of the 100,000 houses that are currently being supplied. So you have that huge deficit in terms of the demand, or let me say the need or the requirement versus the supply. So that largely explains why we should be expecting higher rents. So there'll be more people looking to rent, there'll be more people looking to buy, assuming that they have the capacity. But what really matters in this case is that we have higher demand versus supply. There is no market where you have that kind of a gap that you wouldn't see prices going higher.
Fantastic. Do costs of building materials, do they have any impact at all in this equation?
They have an impact, and the impact is material. If you take a look at building materials, let us take cement, for instance. Cement prices have gone up from like 3,000 or thereabout last year. As we speak, it is around 4,200, 4,500. That in itself is a major component. If we move away from cement and we go to the metals and some ions that they use in constructing, what you find is the impact of naira devaluation or depreciation having a major impact because of the import cost, the landing cost. Even COVID-19 has an impact because there has been some sort of delay in terms of supplying those materials that are required to build houses. So if we put all those together, what you find is, building materials prices going higher. So 11 to 15% devaluation is what we have seen on the naira in the past, like 1.5 years, or let us say 1 year. On a year-to-date basis, the currency has gone up by like 11%. So that largely explains what you could see in terms of imported materials for building houses, in terms of other materials that are related to building houses. That has not captured what investors are looking to earn in terms of the yield on what we call rental yield. That has not even come into the picture at all. So rebuilding materials have a major impact in terms of the cost, or the rent outlook.
And I take it that inflation also plays into rental yield as well, right?
And these are the elements that feed into inflation. So the cost of all these materials are what this MBS looks at, put in a basket to calculate inflation. So these are the rudiments.
Fantastic. Another, I want to some housing, so to transportation. What do you make of the MBS transport fare for buses?
Transport fare, I think we can take a look at it also from the standpoint of cost. So the cost of buses this year aren't anywhere close to where they were last year. And that speaks to also imported inflation, imported costs. So we don't manufacture vehicles here, we all know that. So we have those buses being imported, and at the point of entry, there is the duty, there are duties for them that, that they pay. So when you capture that on the one hand, and you capture also the fact that the owner of those buses are going to build some markup for them to, give it to the drivers to drive, which, eventually they have to pay instrumentally. So with that, you will agree that, those are the drivers. And my sense is that it's possible that the government considers that duties be paid on a constant basis instead of on a market price basis. I think this is going to be a major discussion for the government.
I want to quickly get your take on the today is the final day of the month of May. We're about to go into June. You're the head of research at Chapel Hill Denham. What's your moving away from housing and transportation now? The equities and fixed income space, how do you think things play out in June?
If we talk equities first, what I think investors should watch out for are those sectors that have delivered strong, ability to grow despite regulatory headwinds. And the first of them, to my mind, is the telecoms. The second, I think, are the consumer companies. So in the telecom space, I think in the month of June, investors should focus more on MTN and Airtel Africa.
Okay.
One, because of the strong free cash flows. Second, and probably more importantly, the fact that the government has lifted the ban on the sale of new SIM cards.
Right.
So that's a positive one. The consumer sector is playing like a recovery. If you take a look at Nigerian Boris, take a look at Guinness, we are seeing more people drinking. We are now seeing, some relaxation around the, lockdowns that were put in place because of COVID-19 last year. So those relaxations are, supporting volumes for them. And that looks like a positive one that investors should focus on in June. Fixed income, I think the outlook for fixed income is more to the upside in terms of yields. One, because we still have high inflation. Two, is because we still have a case where we need to attract foreign investors into this market.
Right.
And that speaks to OMO issuances by the CBN governor, and that we'll probably see higher OMO yields in the market. If that materializes, what we're probably going to see is higher yields on treasury bills in the market.
And will we see, because the equities market is down in single digits, if you're seeing higher yield, what's the impact on equities? Will they cycle out funds?
So it will most likely cycle out funds, but what will remain are sectors that have demonstrated resilience. Let me give you an example. Seplat is up 71% year to date.
Huge.
Despite, the broad weakness of the markets.
Right.
Nigerian Boris, is up like 5% year to date. That is marginal, but it is something that can be built up upon. So telecoms, the recovery we are going to see there, investors should watch out for that decision by the government to lift the ban on the sale of new SIM cards. We are going to see growth, coming in that sector in the month of June.
Final question for you real quick. I think less than a minute to go. Can we do the 50% year-to-date return, blockbuster year-to-date return that we did on the equities market last year? Is that possible?
It is impossible by June, no. But in the second half, it is possible by the time we see stronger recovery of the economy.
Fantastic stuff. Tajudeen Ibrahim, Head of Research at Chapel Hill Denham. Thank you so much for taking us through the transportation report from the Bureau of Statistics, also the outlook on rental prices in the commercial cities across Nigeria, and also giving us a fixed income and equities outlook for June.
It's my pleasure.
Thank you so much, sir.